Hi, everyone. Hey, I'm Deanna Moffitt, and I am a coach here in Journey. You know me. If you've gone through the Journey program, you've seen me in at least 2 classes. And I know I have several clients and have worked with several students who are often thinking at the beginning of their business journey, I don't know how the business part of it feels the scariest. Everyone knows how to coach. You've been through the program, but the actual starting up the business feels like the most tenuous and scary part for a lot of people. So I asked my accountant, my bookkeeper and tax accountant, Erin, to join me in a conversation. Erin, thank you so much for being here.
You're welcome. You're welcome. I'm glad to be here.
Yeah, Erin Wayland is the founder of E&M Tax Services here in Southern California. But as she tells me, she can work with anyone in the United States. But Erin, we want to make sure that everyone knows we're not giving legal advice today.
Yes, and legal or tax advice.
Oh, yeah. Thank you for that clarification. Legal or tax advice. And if anyone has some specific things for their business, we can certainly ask the question, but they really need to talk to someone or do their own. I hate that term now, do their own research, but find out what they need to do for themselves in their own business situation. Is that correct?
Yes.
And Erin, could you just kick us off? Could you tell us a little bit about your business and what you've been doing and how long you've been doing it?
E&M Tax Service has been around for about 12 years now. Before that, I worked with high net worth individuals and businesses in the entertainment industry, doing full business management. So starting businesses, getting insurance for them, doing their tax return, making sure their taxes are paid, paying their bills, doing everything. And that had transformed into me starting E&M Tax Service with another partner of mine that worked with me at the business management firm. And then from there, E&M has grown to service kind of just a broad individual single owner companies and helping you guide them through the tax scenarios and helping them with accounting. So we have 8 employees working in tax and bookkeeping side and some assistants mixed in there. And we're here to help you guys.
Yeah. And for anyone listening, I have to tell you, this area of my business was my biggest heartache and headache. And when I found Erin and realized I could just kind of help, she and I meet several times a year, go over my books. We look at, and she looks at, helps me plan out for my taxes and what's a write-off and where I need to be putting some money. It has been such a relief to me, Erin. I think you know that every time we meet, I'm always so grateful to have you in my corner. And I thought this conversation that we could have, it really just geared toward someone who's just kickstarting their business. And as you said, as a solopreneur, someone as a single owner of their business. And there are some really basic questions that I know I had when I first started. And I know that everyone you work with when you're first starting them has, but maybe we can start at the very beginning. And maybe what my first question was, is what is the best way to set up a solo company when I haven't even made any money?
So it really depends on everybody's situation. I hate to say that, but It really truly does. Now, it's really where you're seeing it going, and we need to plan for where you want it to be. It's best to set up something in the beginning so that you're not setting it up in the middle of it. If you just kind of use your personal bank accounts and just like make it work, it's sloppy if you ever get audited. Lots of your expenses could be classified as personal expenses. And also later on, once you're kind of making your way and working and making money and going along, you then will have to backtrack and set up the company, move everything over, move the bank accounts, do everything. So it is really important to talk about it at the beginning and set something up. Now, what should you set up is the biggest question. We're going to talk about different ways that you can set up your company, either just a DBA, which is also a sole proprietorship. It's filed on your personal tax return. I'm going in list of the easiest and to like more of the more complicated ones. So DBA, sole proprietorship, easiest, least costly way of doing things. LLCs are the next step. If you're a single owner LLC, all it does is basically like having a DBA, but you just have some liability protection. But for tax purposes, your DBA, sole proprietorship, and your LLC are exactly the same. S corporation, which is the next step up from the LLC, C corporation, and partnerships for those of you that have more than one owner with you. Anything in specifics that you want where we should talk about first?
I love it. Can we go back to the very beginning and even define what a DBA is? Because I think some people might not even know what that is. And what would be the pitfalls and the downfall or the entryway of that and maybe the pitfalls?
So DBA is doing business as. So as a sole proprietorship, you can't legally use any name until you have a DBA. So it's filing per county. So DBAs are by county. So you file by county, registering just to say, I have a business and my business name is blah, 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 whatever it is. So it's just something, it's not any legal entity. It's just so that you can do business under a name other than Erin Wayland or Deanna or Sharon. So that's all it is. It's nothing legally binding or anything like that. It's under, so when you file your DBA, you're filing it underneath your personal name. So everything is really, you can get a check under Deanna Moffitt, or you can get it under Consulting DBA. It doesn't even be called DBA at the end. So it's the very, very beginning. Now, anybody that starts a business, so anybody that's dog walking, let's say, it doesn't even matter. If you're receiving money from not an employee, from not a W-2 for doing work, you're considered a sole proprietorship right there. So that's basically it. So you don't really have to do anything for a sole proprietorship business setup wise. The act of just taking in money and being a business and buying some dog leashes and some dog treats for your dog walking business is a sole proprietorship. The next level of the sole proprietorship is just putting a name to it, which is the DBA, doing business as.
Gotcha. And do you know, how does someone go about even doing a DBA? Like I remember going through LegalZoom or something like that.
Yes. So most lawyers don't handle DBAs. So you wouldn't go to a lawyer because it's not a legal entity. That's why they don't. You would go to LegalZoom does them. There's a place called My DBA Store that you can do it. You can do it yourself, but honestly, the DBA process is kind of confusing. You have to like publish something in a newspaper and register with the city or the county, and you have to like go down to the county office. So using one of these online services is usually cheap and very cost effective because you're not going to be spending hours trying to figure out how to publish something in a newspaper.
Yeah. When I created mine,
or DBA.
Yeah. When I created mine, it was super easy. And I have to say, in my very beginning, I felt like even then I was like, I did it. You know, like, I know it's not a legal entity, but it was the first step into, I felt like I needed that to open up a business account, or at least a separate account on my banking account. Is that true?
You don't actually need a DBA to set up a business account. You can open a business account in your personal name. But honestly, if you're going to start a business, you're going to want to have a name. So having a DBA is very, very, very common. And the next step is, what you do need to have your business account open is a federal identification number, which you can get the federal identification under your personal name, or you can get a federal identification number under your DBA name, which you don't, by getting a federal identification number, you don't have to use your personal social security number when you fill out W-9s and send it across everywhere. So it's a lot safer to have a federal identification number.
Awesome. And that is the true then separator between this is me versus this is my business.
Yes. Yes. And anybody can go to the IRS website irs.gov, type in federal identification number, and can apply for identification number as Erin Wayland or as my DBA E&M Tax Service or whatever.
So helpful, Erin. I mean, I know how basic this is. I know this is taking your brain back to the very, very basics. But for new coaches who are just spending, who want to start this is all such helpful information. So the DBA is kind of the ground floor. You just entered the building. And then LLC, what's the difference between an LLC and a DBA?
Okay, so for tax purposes, nothing.
Okay, good.
So you're going to be, and depending on your state, so for federal purposes, you don't do anything different when you're an LLC, one owner LLC, different when you have two people in the business. So if you're setting up an LLC, the only thing that's different is the liability. So you do need to go set it up, either LegalZoom. I really like an online service called E-Minutes. They're way better than LegalZoom, so I would not do LegalZoom. And they talk to you, and it's great. And then, so the LLC, legal liability is all it technically is. I do and don't like the LLCs at the same time, so it really depends on where you're at and where you think you're going to be. In California, LLCs are really expensive. They're $800 a year. In New York, they're $20 a year. Oh. So depending on your state that you live in, or like Wyoming, you don't even have to pay an entity tax. So depending on where you're at, an LLC is very smart. And I would do over a DBA. In California, I don't always say that because why pay the $800 unless you truly need the liability protection? And that's up to whatever the type of business you're in.
Such great information. And anyone can find out their LLC filing charge or whatever that costs by Google, or is there somewhere specific they can go?
Each particular, Google, and then that will lead you, but make sure you're getting to the actual government site. Like if you're going to California, it's stb.ca.gov. Each place has different, I know that one by heart because I'm in California, but each state has like revenue, and make sure at a .gov and make sure you're actually on the state website and you can see what the entity fee is.
Awesome. And then the next level up that does have a tax implication is going into an SCorp. Is that correct?
Yes. S corporation is a completely different entity. Now, for legal purposes, LLC and S corporation are kind of similar. They have the protection. The S corporation is the next step. So an S corporation, when we start out, starts as a corporation. So when you go set up a company, you're setting up a corporation, and the S in front of it is a tax election. So for tax purposes, it's a whole different return. So I tell clients when they're setting up an S corporation, think of it as a different person. It has its own birthday, the date that it started, its own tax ID number, its own bank accounts, its own line of credit, its own or credit line, its own everything. Everything is completely separate. So this is pulling it away from your personal and keeping everything completely separate. So nothing's linked. Where the sole proprietorship, if you have a business credit card, it's still going to be underneath your personal credit card. In the S corporation, we're stepping it up. LLC too, when you get a business credit card, it's not underneath your personal. Just tax purposes are with the personal.
Awesome. So I'm just going to stop here when it comes to those entities and see if any of the participants here on the call have any questions. So Sarah or Phil or Kim, hi Kim, join us. We were just talking about kind of business entities between DBA, LLC, and SCorp. And if after Erin is sharing anything, if you have any questions at this point, let me know. Sounds like they're good. You can also put them in the chat box. Yeah, thank you. Great. Yeah, Phil, if anyone has questions as we're going, feel free to put them in the chat box. Phil says, is he in any danger not incorporating?
Okay. So for legal purposes, I'm not a lawyer at all. So legally, like if you get sued or whatever, I can generally tell you legally, if you get sued and you're not a corporation, you're getting sued personally. If you're getting sued and you're an S corporation or an LLC, you're getting sued. The business is getting sued. Tax purposes, you're not in any trouble. People are very 30-year-old businesses are sole proprietorship. So you could run your business as a sole proprietorship for a very long time. The reason why you would switch out is if it's better for you for tax purposes, in my opinion, or legal purposes where you have something that you want to protect. If you have lots of personal assets, you might want to put something in a corporation or an LLC to protect your personal assets.
Yeah, I think that's a really important distinction, especially, as a coach, likely that we are not going to be sued. We have coaching agreements or contracts that state very clearly we are not, it's sole coaching responsibility. They're responsible for their own health and well-being and all of that. So, certainly can be, but less likely for all of that. So thank you for that clarification between the importance between legal and taxes, and that those are two different things. Yeah. Sharon just asked, can you share if there are any benefits to an SCorp over an LLC?
Yes. So S corporations don't pay tax benefits. S corporations don't pay into Social Security and Medicare tax. So what we do as an S corporation is you have to be on a payroll, and payroll tax and self-employment tax are essentially the same exact thing. When you are a sole proprietorship, you take, let's say you made $100,000 after expenses, you'll take $100,000 and you'll times it by 15.3%. That's what Social Security and Medicare tax is. When you are an S corporation, you can choose to pay yourself a different amount. So if you made $100,000 income minus expenses, you can choose to pay yourself $60,000. And only the part that you choose to pay yourself as a payroll is taxed with Social Security and Medicare tax. So you will potentially be paying less tax in the S corporation once you hit a certain threshold. Yeah. Because you're just paying less. It's not off of the total amount. It's what you pay yourself that you're paying off.
Does that help, Sharon? Phil, do those answers help? I know when I switched. Yeah, does it? Yeah.
Thank you.
I certainly grew into, I didn't start out my business as an S Corp, and I certainly have grown into that. And she's right. I end up paying less because I get paid less from the business to do that. But I have all the, I have write-offs and stuff to take care of that. And maybe we can talk about that, Erin. Do you have, you look like you have something on the tip of your tongue. You want to say before that though?
The partnership. Before we get out of
let's
entities,
do that one.
Let's talk about a partnership.
Thank you.
Whenever you have another business partner or 10, so once it's past one, it doesn't matter. Anything over one, you have different entities to consider. So the LLC, when you request to be an LLC and you have more than one partner, it's now a partnership tax return. So it does create another level of a tax return. So it is a separate return. And when you have a partnership, you can be an S corporation or you can be an LLC, but you cannot be a sole proprietorship. So when you have more than one, that sole proprietor level just kind of goes away, and you now have to step it up into having an actual business. And because you have to set a business up, you might as well just do an LLC or an S corporation, because you already have to file everything as the cost of a full another tax return.
That's great information. And thanks for sharing that, Erin, especially as coaches are thinking about, oh, I want to create retreats, or, I've got someone else I want to partner with and we want to create this program. That's something that you need to consider. And I know you can have several entities underneath, like you could have, yes. Can you speak to that?
Yeah, you could have as many entities as you want. I mean, you can start 100 businesses and have 100 businesses if you want. And your businesses can own other businesses. So, and depending on what entity you pick, can limit it. Like the S corporation is very more limited. So an S corporation can't be owned by a corporation, But if you're in the LLC, it's very broad. So LLC can own as many businesses as it wants.
That's great. So you could essentially be doing an LLC, doing business as this business or this business or this business or another LLC underneath it.
Yes.
Awesome. Great. Well, Erin, I have just a quick question that someone asked. Do I really need to set up a separate bank account right away?
Yes.
Yes, you do. And tell us why. Why do you think that's important for us to be doing?
Okay, so if for auditing purposes alone, if you mix personal and business, you will always into one personal account. You will always, if you get audited, have to show your bank accounts to prove the expenses. And if they see personal mixed with business, they can limit your business expenses. And they can say reasonably, you're using this account as personal. So this meal that you went out and said was business could be personal because this is your personal account. This computer you bought could be personal. So they could limit and bring a percentage down. So they can say all these expenses in here are probably only 50% business, and they could limit your expenses in an audit. So the big reason is so that you don't get in trouble later.
You've made it really clear to me that it's just easier if I have, my separate accounts. It's just so much easier to track what's business.
It's so much easier. I mean, we go through your expenses and we're going through and I'm looking at an expense and I'll say, hi, Deanna, what is this thing that you did for $300? And you'll be like, oh, that was a month ago. Let me look. I don't know what that is. Could you imagine if that was mixed with your personal stuff and you would have to be going all over the place? Do you remember everything that you did a week ago? Like you just don't. So.
Just asked me this morning, Erin. I can't even tell you what I did this morning.
I was going to say, do you remember what you ate for breakfast? But I took that to another level.
You know me better than that, Erin. You know I can. Well, awesome. Yeah, so we're getting a definitive yes, we should have a separate bank account. And I think that's such basic, great advice.
Yeah, it doesn't even need to be a business account. If you can't go set up a business account for whatever reason, it just needs to be a separate bank account. So if you're a sole proprietorship, set up a separate bank account, set up a separate credit card. These two cards I use for business, these two cards I use for personal, and just keep it separate.
Yeah. So any income that comes in from coaching should go into that account, not mess around with your personal and any expenses. And you can always transfer money from that account to your personal, but income should all come in there. Yeah.
Yep. Income comes in. I always say save money for taxes, spend your business expenses, and then you could transfer the rest of your personal account so that you have it for personal life.
Yeah. Okay. Well, you just mentioned, I have another question, but I'm going to ask this one first because you just mentioned saving taxes, and I don't want anyone to get burned because I think we don't talk about how much should I be saving for taxes.
Yes. Okay. So everybody's different. So a lower taxpayer is going to be in a lower tax rate, and a higher taxpayer is going to be a more income producing taxpayer is going to be in a higher tax rate. Federal taxes start at 12% and go up to 37%. That does not account for the state that you're in, plus self-employment tax, which is 15%, 15.5%. So you're going to have business expenses. It's income minus expenses, and then whatever's left over is what gets taxed. I always tell people 35% of the top when you're not in a sales business. Like if you're in a retail sales or like online sales business where you're selling for $100 a product, but you spent $80 on it or something like that, then there would be no money left. But if you're in a consulting coaching business, 35% straight into the savings account every single time.
Yeah. Such great advice, Erin. I know you gave that to me first and I was like, every year it's a big problem for taxes. Like it's finding.
But now you have too much money saved for taxes, right? And that's a better feeling when I come to you. Hey, okay, this is how much you owe right now. You're like, oh, I have money in here that I haven't even been paying attention to because you told me not to.
Yeah, it feels really good actually to be able to do that, and yeah, I'm so grateful for that. All right, so we heard that here. basic 35% off the top if you can. I mean, so there's just no surprises. I think that's the scariest thing when you really start making some money as a coach and all of a sudden you get the tax bill because, when you work for a company, they take care of all taking that stuff out at the top. And as a new business or self entity, that can be a real painful experience.
Yes. And just know that when you are a small business, you are paying less tax than that employee. That employee that you used to be, for some of you, was getting taxed off of what you made. So if you made $100,000, you were getting taxed off of $100,000. So all the taxes are coming out way more than 35% after Social Security, Medicare tax, state taxes. When you're a business, you made $100,000. Now you're writing off a portion of your rent, portion of your cell phone, all of your business expenses, a portion of your auto expense, things that you would have had normally. So now you're not paying tax on $100,000, you're paying tax on $70,000 or whatever it is after your business expenses.
Yeah.
So
well,
way less.
That was, you're just doing such a great job, Erin. I would never have I haven't fed you these things, but you're really leading us into the next question here. Cause I think that's a big question for everyone who's just starting out. Can you give us some ideas as coaches? What kind of things? And again, everyone's going to be different. I totally get that. But what are some kind of things that we as coaches can be writing off?
I tell every one of my clients, when you go spend an expense, think about it before you do and have two cards out. Am I doing this because I need it for business? Because I'm going to do something, I'm doing a seminar and I need to do this? Or am I doing it because I nothing to do, I'm going on vacation? And every single time, if you have to have whatever you're purchasing for business, then it's a business deduction. There's a couple no's on that I'm going to go over, but in general, everything's a business expense if you need it to be a business expense. So I'm a tax accountant. So if I'm going to go to the tax seminar in Florida, I'm going to a tax seminar in Florida. I'm going to improve my business. It's a business deduction. If I want to go take a course, it's a business deduction. If I meet with clients all over town, I'm driving my car to all of these people, then I'm going to that's a business deduction. So really anything that you're actively doing something for business is going to be a business deduction. I want to talk about the nose though. So
yeah, good one.
Nose is wardrobe. Wardrobe is a huge, huge, huge one that everyone's like, well, I bought this suit because I'm doing a presentation. The IRS hates wardrobe unless it's safety equipment or something that you can't use somewhere else. So if you go buy a suit to do a presentation or a nice top or something like that to go do a presentation and you're on camera, they don't care because you can technically use that again somewhere else. So wardrobe is usually off unless you're in construction and need a hard hat and some tool boots and safety equipment. So wardrobe. And then the other one that is fairly new to us is entertainment. So the deduction used to be called meals and entertainment. Now the deduction is called meals. So I tell people in LA, you can go to the Dodger game and take them, but you can write off the Dodger dog, but you can't write off the baseball game. So that's, and that's a big one. So this was 2018 that this came in. So this is no more golfing, specifically in the tax code is golfing, fishing trips. What else is in there? And theater tickets or something is in actual code. So the entertainment part is not.
Now, can I ask you a hypothetical question, just out of curiosity? As a coach, what if I create a business where all of my clients, I take them fishing, but we're talking about big, deep life things? Would that be right? I'm the fisher for men. That's what I call myself. And I have all of my sessions I do on a boat and we fish from the boat.
Okay, so if you're fishing from a boat and it could be different things. You're teaching something from a boat and this is why they're learning it. And then you're creating a business where they're coming and they're paying for this experience and you have to write off that experience. That's okay. Mm-hmm. What it is, meals and entertainment is, hey, I want Phil's business. So I'm going to take him on a fishing trip so that, and I'm going to talk and I'm going to win him over. And because I'm going to like feed him a whole bunch of drinks, and then he's going to come over on my side, and I'm going to sell him this, whatever. That's entertainment. You can still do things like my group, it's COVID, so we're not doing anything, but they did a great tax season. I'm going to take them all to go to the spa. I can still take them to the spa as a company retreat. That's not entertainment. It's acting with a client and taking them somewhere.
Gotcha. So if I had employees, there's employee benefits. I love that. So Phil, sorry, we're out on the drinks part, but you have a question here. What about for networking? If you're traveling to some place or spending money at a place and you're there to network to find clients.
Okay. So traveling is one of those things you need proof that you're traveling for work. So say I go to Florida, and I don't know why I'm saying Florida so much, but I'm going to Florida.
Please don't go to, listen, don't go to Florida. Not right now, at least.
Just, we're hurricane experiencing. I don't know. We're going to New York. There we go. And I'm going to New York because I'm going with a group of friends. I happen to have a bunch of clients in New York, and I'm going to go visit them. That's not a deduction. Now, I am going to a seminar in New York for whatever reason, and I'm going to meet with other businesses. I've planned it out ahead. I have email proof. I have reservations for my seminar before I go. Now I'm going, and so now my flight is deductible. All my meals while I'm there are deductible. My hotel's deductible because I pre-planned it. I'm going there to work. And then I meet someone while I'm there. I take them out. I can take them out to dinner. That's totally fine. I just can't take them on a fishing trip. But I can take them out to dinner. I can buy them drinks. Those are all under the meals and entertainment section. So that part, yes. Did I answer your question, Phil?
So if it's a planned seminar, if it's a planned thing you're going to,
I go, and then when I'm there, I'm also going to do some other things because, if you do some personal things in there, that's fine. But the intent needs to be.
So he's wanting to know
if you're just going to network. So are you going to network with somebody that you already pre-planned? Like, somebody that's in your field and you already have pre-planned, I'm going there to meet a specific person.
And I'm guessing this is hypothetical at this point.
Yeah.
So we're just going to explore.
Nope.
No.
Yeah. Then it's not deductible.
Yeah. Great question.
It has to be a pre-planned idea. And I have a lot of people, especially with COVID. I'm in Hawaii right now. I decided to live in Hawaii or go to Hawaii for 2 months because I'm working from home anyway. But I'm working while I'm here. So my whole vacation is a deduction. So I am not, just because I bring my laptop and work on vacation, it's not a deduction.
Good clarification. And Phil says, so set up some appointments in advance.
Yep. Yes.
Great clarification, Phil. And thank you for handling those, Erin. All right. Is there anything else specific to coaching? So if I could say, if there's, Erin knows this, I use the education discount or the coaching because it's for my field. I mean, I keep using that one, but I continue my education more and more. But is there anything else that you can imagine? What do we do? A lot of education.
So just general expenses, office supplies, anything you buy, table, chair, whatever. Subscriptions are a big one that you don't really think about, because you might have an office subscription personally, but you use it for business. Change it over to the business account. Subscriptions to save software, save files, all the background stuff, apps, everything like that. Your auto expenses are a big one because most people are driving around to do something. So all of your auto stuff, we do have to take a percentage of it as personal, but most of that, home office is a big one, especially now. home office, I can't tell you how many people ask, oh, how much is your rent? And we start a home office deduction and they're like, no. Like I hear I get audited over a home office. It is not as scary of a deduction as people think it is. It is, if you have a home office, a dedicated area that you use, it doesn't need to be a room, but a dedicated area, and you take the right percentage, it is not a no-no. It is absolutely allowed. So don't think of that as a scary deduction. And it actually can help a lot, especially if you're paying LA rent. And then we have like your cell phone, your internet, little purchases, equipment purchases, anything to continue education, travel. We just went all in detail about that. And everything when you do go. So if you set up those appointments in advance, everything that you're doing there is a deduction except for the entertainment part. So like all your meals, not just when you're eating with somebody. If I'm traveling for work, every bit of your meal is deductible.
Yeah, that's great. Can I ask, I'm going to ask anyone who's watching any other questions around deductions for taxes. That was so helpful. I know Erin continues to educate me on this area. There's no expectation that anyone would just get this and get it right away. And I think there is a lot of confusing information out there about what's deductible and what's not. Yeah.
Yes. For the most part, besides the entertainment and the wardrobe, if you're using whatever it is that you're purchasing for more than 50% for business, then it's a business deduction. So that 50% rule is a good idea. Like every time you go, am I going to use this more than 50% for business? And it's a business deduction for sure.
Yeah, that's great clarification. Thank you so much, Erin. Hey, Erin, and I don't know if you would know if you have any recommendations on this, but it's just a question that someone asked around software. If you had any recommendations around what software to use to track income and expenses.
You already know this, Deanna. I love QuickBooks.
You do. And I love that you love it. And I love watching you use it on my accounts.
I tell everybody to use QuickBooks. It links up with everything. It's the most user-friendly. A lot of other softwares out there kind of suck, to be completely honest. They don't keep up with the expenses. You can't reconcile. QuickBooks is great. There are a ton of other apps out there, but I really, really like QuickBooks. So I'm going to say QuickBooks.
That's great. That's all we need is one recommendation. Erin, do you think I think I've covered all my questions. I'm going to open it up to anyone who's here who has any question. And is there anything else you think we should know as new coaches coming in when it comes to, that black box for most of us about setting up our business?
Yeah. So when you set up a business, your first thing you're going to do is go set up bank accounts. Right? You want your money to come in and you need to spend money. Get a business credit card right away, because if you set up a LLC or an S corporation or a partnership, it has its own credit. So you want to start building so that if and when you need a bigger credit line or you need a line of credit or something, you start building that. If you don't build it, you won't have it. It's just what works, just like personal credit works. Once you do that, make sure that whatever you're doing, if you need to register within each city. So each city or county has different rules. So like in Los Angeles, we have LA city business tax that we have to pay, and they're very, very, very strict about it. So we filed the LA city business tax. Now that's different for Orange County, and that's different from all over the place. So make sure that when you look into your city and county rules, and make sure that you have the correct licenses, because that could come bite you in the butt way later down the line. Like, oh my gosh, I haven't been paying this tax for 10 years, and then they get you. So make sure that you're following the rules of your city or county, because there's more than just federal taxes, and even at the state level as well. And then save for taxes and know your due dates. So meet with a tax accountant, know when you have to pay taxes, when you have to file, ask about filing quarterly taxes. If you're an S corporation, you have to have a payroll, ask about your payroll, how the accountant handles it. and ask questions. Don't be afraid to get an accountant.
Yeah. Erin, I have to say, you, again, such a great, to me, it was like, it's money that is so well spent because it just relieves me from the headache of having to deal with something I just don't understand that well. And you're so great about asking my questions and helping me understand things. I can't thank you enough for that. And Erin, you can help people with taxes everywhere. Like, you're not just located in Southern California. Is that correct?
Right. Yes. I'm an enrolled agent, so I'm licensed with the IRS, not by state.
Great. And if someone was interested in contacting you or someone at your organization, how could they do that?
You can give me I can put my email out there. I can put it in the chat, Erin Wayland at emtaxservice.com. So email is the best. I have my assistant in there, so she'll set up a call with me right away. So that's how I do most of my intake. We set up a call, then we talk about your individual situation, and then we go from there. So that's the best way to get a hold of me.
And any last questions from anyone who's here? And I know there's lots of people who are interested in this conversation, but Phil, Kim, or Sharon, any last minute questions? That's awesome. And Erin, I put that in correctly in the chat box?
You did. I double checked.
Thank you, Fred. Do you do regular business accounting too, or just tax?
Yes, we do. We do bookkeeping and tax.
Mm-hmm. Yeah. Erin, my dear friend, thank you so much for doing this.
Very welcome.
I know you are going to, but I'm going to post this onto my YouTube channel. I'll send you a link to that as well. But there's lots of people who could not be here at this hour today who are super excited about this conversation. Thank you so much for coming in here and having this.
You are very, very welcome. Okay. Have a wonderful day, everybody.
All right. Thanks, Erin. Talk to you later.
All right. Bye.
Bye.